Okay.
Right, Fishers.
Fisher's Market, we all know how much this upsets me. I mean, we should be pushing this towards one of the last market reports because it kind of gets me all wobbly going. I mean, we just finished Indianapolis. Now we're into Fisher's. We're at 84 days on the market, which is almost exactly where we were last month at 85. Your average rents are somehow ticking up to $2,300 from $2,195. So you're up $105 on your average rents when your average days on market is still, if I'm in this market, scary high. You can't afford to be on the market for 84 days before placing a tenant.
No.
And your active homes, 90. It's exactly where we were the previous month. We had 90 active homes. Now, the only real positive news I'm seeing for the Fisher's market, and then I'll turn it to a little bit more of a positive note here in a second. But the average sales price at $370,192 is up almost 2%. So it's up from $363 last month. Again, this is the investor's point of view. So this is going to be any home that's sold under the $500,000 price point. And then total of homes sold at 98, which is up 10 from the previous month, which is really not a big surprise with the sales market. Fisher's, it's so close to the Noblesville market, which we're going to get to here in a minute. If I'm an investor looking at the market, I'm looking at Noblesville for sure. If I have a home currently in Fisher's at a 2, 3, maybe even 4% interest rate, and I'm wondering, well, should I put my home up for rent? Yes, you absolutely should hold on to that and turn it into an investment property, because Fisher's overall is a great market to have a property and throw it on the market for rent. You have great quality tenants, great schools, and those tenants tend to stay for a long period of time, in my experience. So if I have a property already there, I'm not going to hesitate to put it on the rental market. If I'm a new investor, I'm probably not going to look at Fisher's as my first potential prospect.
Yeah, and it depends. I think I've said this before, but for me, Fisher's it's not a cash flow play, that's for sure. It is a safe, inflation hedge play, where you're going to get appreciation, you're going to get rent growth, you're going to get, like you said, good quality tenants, and really very, very low risk in terms of your investment. You know what I mean? In terms of the quality of the tenant. I mean, it's almost not guaranteed, but I mean, if an area is going to go up, Fisher's is going to be one of the areas that's going to go up. So it's a safe bet for sure.
Yeah, exactly. I mean, there's still a tremendous amount of new development that goes on in Fisher's, and I've heard a little bit. And so I'm going to mention this. Maybe you've heard a little bit more, but they're building a new. Is it the ice skating team is building a new arena there in Fisher's?
Oh, I haven't heard that.
New news to you. Okay, well, everyone who's watching, be sure to Google it. I know that it's happening. I just don't know the specifics of it. So give it a Goog. You're going to find some interesting information, which is. I would imagine only going to continue to drive the Fisher's market. The leadership in Fisher's has done an excellent job at driving that area for sure.
Yeah, it's a great area. It's just a great area.
Okay. All right. Moving on here. Active homes, man, talk about correlating with last year. You're going to get a sneak peek into June. We're going to get up to 119 active homes in the market. 90, which was right along with our lowest for the year. But really close, right? I mean, you're within 12 homes.
Yeah.
Days on market, we continue to see that tick up. We'll see. I mean, I expect June and July. I still in the Fisher's market expect it to decline and go down a little bit because, again, the school systems are amazing. I think there's going to be a lot more traffic driven to this market for July and June and July. So I expect that to tick down. So there you go. I finished it on a positive words. That's the best I can do.
Well, what's interesting is that we are seeing it. We do have that sneak peek into June, and we do have an increase. But that's kind of more normal than what we saw in Indy. In Indy, we had that like crazy drive down from January. For some reason, we had a ton of inventory hit the market in January or on the market in January, and then it slowly dwindled. We don't have that here in Fisher's. So to see that tick up is not necessarily concerning because we didn't have the huge inventory to start with. So this is the inventory influx is a bit more normal for seasonality. And you can see the same thing happened last year, and days on the market went all the way down to 23 in September last year.
Good point. Yeah. Solid point.
So Yeah, I'm with you. I think this is going to go down too.